Guys, welcome back to the channel. Last week I released my first video where I gave an overview of the channel and what my goals are for this portfolio. As I mentioned then, I will be depositing $500 every month, but unlike many others who use M1 Finance, I've decided to manually place trades. I've made this decision for two reasons. I want the ability to decide what stocks to buy, especially in the near future, since my positions will be very small to start. I also think it's a great opportunity for me to perform an analysis on the stock that I plan to buy and use that as a video. So in this video, I will be performing an analysis on Pfizer stock, and hopefully I can lay out a convincing case for why it's a strong investment option at the current prices. To give you guys a little context, Pfizer is one of the world's largest pharmaceutical firms with annual sales over $50 billion. Pfizer also spends a leading amount on research and development, close to $8 billion annually. Now, while Pfizer historically sold many types of healthcare products and chemicals, prescription drugs and vaccines account for the majority of sales now. Pfizer sells their products globally, with international sales representing nearly 50% of its total sales. And within international sales, emerging markets are a major contributor, representing over a fifth of total company sales. Now, the company has a market cap of $192 as of the recording of this video, and it's the third largest pharmaceutical company when ranked by 2019 revenues. They currently trade at a PE ratio of 12, which is 68% cheaper than the pharmaceutical industry average of 38. And the stock also trades over 40% below their 5-year average PE ratio of 21. If we take a look at their 3-month graph, the stock has really struggled, with their price per share dropping by almost 20%. Furthermore, the stock has not moved over the past 5 years, while they have maintained constant revenues, grown profits, and increased their dividends every year. Now, in order for us to assess the strength of Pfizer stock, we need to look at their pipeline. Currently, Pfizer expects approximately 25 to 30 drugs to be approved through 2022, including around 15 products that have blockbuster potential, including line extensions for Xandi, Ibrance, and Xeljanz. And according to Zacks research, half of these potential blockbusters are expected to receive approval by 2022. Pfizer is also increasing their focus on the growing biosimilars markets. Biosimilars are equivalent to the generic versions of drugs, but they employ the use of living organisms when developing the product. They're basically the equivalent of the generic versions of drugs, but for the biotechnology sector. Now, I think this is a key strength of theirs because according to Grandview Research, the biosimilars market is expected to grow by almost 35% every year for the next 5 years. In addition to strategically placing the business in favorable markets like biosimilars, the company also has a history of successful acquisitions, including the July 2019 acquisition of Array Biopharma for $11.4 billion. Array has a very promising pipeline, highlighted by Braftovi and Mektovi, both designed to treat forms of metastatic melanoma. The combination of these two treatments, along with cetuximab, may be the first chemotherapy-free treatment for this ailment, as it has been shown to decrease the likelihood of death in patients by 48%. According to Pfizer officials, they expect earnings to be negatively affected by this acquisition in 2020, unaffected in 2021, and then it should improve their profitability into the future. This shows me that the company is more focused on long-term success and protecting the longevity of their company in exchange for short-term results, a sign of a very good investment. Pfizer is also spinning off less successful business units and focusing on their brightest prospects, highlighted by their spin-off of Upjohn. Pfizer is expected to receive $12 billion in cash, most of which is expected to pay down their debt levels. Essentially, this offsets the cost of their Array Biopharma acquisition, allowing the company to swap a rapidly declining business unit for a very bright prospect. Now, although Pfizer will continue to own a part of the new company, the spinoff will allow management of Pfizer to focus on developing and selling innovative products and decreasing their debt loads. Pfizer also has been paying quarterly dividends to its shareholders since 1989, and the only time they cut their dividend was in 2009. And the 10 years since, they have raised their dividend every single year. The company has an average dividend growth rate of over 6% since the last recession, and even though they continuously raise their dividend, they still have a fairly safe payout ratio of 57%. When I look at all the positive factors of this stock, their valuation, strategic positioning, thoughtful acquisitions, and spin-off activity, alongside their reliable dividend payment history, I cannot find a reason not to invest in Pfizer. Because of this, I will be purchasing $250 worth of Pfizer stock, and the rest of the $500 monthly deposit will be deployed after the next stock analysis. The next video you guys can expect from me is kind of a recap of weekly news alongside my thoughts of this recent market downturn in the last couple days. So let me know what you guys think about Pfizer in the comments. If you enjoyed the video and want to see the next one, like the video, subscribe, and make sure you turn notifications on. And I'll see you guys in the next one.